Hey Villa,
Hey Paul,
how's life?
life's good, especially because I ran into an old joke I want to share with you now.
Go for it.
How do you get rid of the Bitcoin analyst at your front door?
Don't know.
You pay for the pizza.
Oh shit. Oh man, we need to stop doing this.
I know, especially when it's both bad and old. It's really, really tiresome. But it is what it is.
We've set a precedence now, right? So we'll have to continue seeing how far we can dig down into the pits of despair with our jokes, right? So, everybody, welcome to Fintech Daydreaming, the podcast that continues to dive into the world of banking technologies and the ever-changing landscape of fintech companies. We continue to bring you the insights and stories from new emerging technologies to game-changing disruptive ideas that are brought to us by fintech companies seeking to challenge the status quo with revolutionary ideas and big, fantastic dreams. This is Fintech Daydreaming. What's up, everybody? It's Paul Krogdahl here, and I will be your host today for this episode. I'm joined, as always, by my fantastic tech freak of a friend and co-host, Ville Sointu. Say hello to all of our listeners, Ville.
Thanks for that introduction, Paul. I haven't been called a freak in a while, but I guess it's refreshing. Okay.
Absolutely. You're a fantastic tech freak, my friend. But today, my dear friends and listeners, we're continuing the journey that we started in our last episode into central bank digital currencies, programmable money, cryptocurrencies, and a future of financial inclusion. There is no doubt that we are, for the most part, moving toward a cashless society, where money will be seen as digital and probably all payments will be done using cards or mobile devices. Whether this is a good or bad thing, we can maybe cover in a future episode, Villa and I, but the trends are all moving in this direction, whether we like it or not. For many, this is a fantastic future, when they no longer need to worry about dirty coins and notes in their pockets and payments or transfers of money easy as a swipe on their phone, just like the yes or no on a Tinder. But even in today's modern and digital world, there is a large group or demographic of people that are dependent on cash, such as the homeless and the unbanked. But there are individuals out there who have looked at the world of cryptocurrencies such as Bitcoin and started to envision a new financial system that will support this demographic of people, and the NGOs of the world that are helping to make life better for the less fortunate. To these visionaries, the future of smart money and programmable money is guiding us towards a brighter future with new opportunities. When Villa and I decided to dig deeper into this subject, I could think of no other guest for the show than the person we have with us today. None other than Jack Nikogosian, aka Bitcoin Jack. Now, Jack, who is the CEO of Aryze, has made it his mission to make money accessible in a safe and easy way for everybody. And this year was even selected to the Forbes 30 under 30, which to me is a fantastically great achievement, Jack. I'm honored to have Jack with us here today as our guest. Welcome to Fintech Daydreaming, Jack.
Thank you so much. Thank you. That was a fantastic introduction. It's great being here, and Ville, good hearing from you again. And I'm super excited to be doing this and having this talk. It's going to be really interesting.
It is, absolutely it is. But I think, Jack, we need to start off at the beginning, right? Why don't you tell our listeners how you got that fantastic nickname, Bitcoin Jack?
That was a while back. So my journey into the world of cryptocurrency started when I was younger. I'm 29 today, and I think it started around 2012 or 2013. I started looking into what this was because I kind of stumbled upon the phrase Bitcoin and crypto online. And being a nerdy kid, I don't even know how I stumbled upon it. It's just like how I stumbled upon, AI and cool biotech stuff. And it's just cool tech that exists in your sphere when you're a geek that looks for that kind of stuff. So I saw that and I thought, all right, that's cool. Let me get some of these Bitcoin. They cost $15 a pop. I bought 2 pieces. I remember sending some money over a bank transfer to a Japanese bank account because MT Gox or Mount Gox, not even sure how it was pronounced, but that was one of the first exchanges where you could basically the only place that you could buy and sell Bitcoins from other people on a bigger scale. So I got a few Bitcoin, 2 pieces to be exact, 2 point something. And then it phased out. I kind of forgot about it until it hit the media again, because suddenly it was worth hundreds of dollars for a single Bitcoin. And people's attention towards it grew, but my interest towards what the hell is this thing? It grew even more. I was super curious why this thing is so fantastic that it just grows and grows. And the more I started looking into it, the more I kind of fell in love with the idea of distribution and distributed computing. And that was the first time I torrented, right? No, so I kind of knew what the fuss was about, right? But it really caught my interest, so much so that I started a Facebook group called Bitcoin Talk Denmark to be exact. And through that group, I got my first internship with a company called Coinify. And through that internship, I said, hey guys, let me live 1 month only on Bitcoin and see if I'll survive. I have to onboard shops to accept the Coinify merchant solution if I want to buy stuff in that store. You want to give it a go? And they said yeah. So I lived a month on Bitcoin only while I was tweeting about it, and I think it was the media site version 2 in Denmark. They kind of gave me that nickname, Bitcoin Jack, because I survived 1 month in Copenhagen only on Bitcoin. Back when it was difficult, not with all the crypto cards you have today. That back then you had to onboard a merchant to accept Bitcoin payments and make that sell. And most people just thought that it was some illicit terrorist money that they don't want to be a part of. So it was not easy.
I seem to remember back to our early discussions when you told me this story, Jack. Because of that, you've got now what you feel is the world's most expensive tattoo, right?
Yeah, because I had a few tattoos prior to getting this one, so I just went to my tattoo artist, a lovely lady, and I kind of convinced her because she knew me, and she was like, "Okay, sure." She's super happy today. She hasn't sold her coins, and she still has those Bitcoins, so she's very happy about accepting Bitcoin that one time. But yeah, I paid for a tattoo in Bitcoin, and looking at it on my arm, I even covered it a bit, but looking down at it, I get kind of nostalgic.
Cool. Well, I mean, it's like a mark that you can tell your children about, right, when the time comes.
Exactly. Mark you get after a party or something is, don't do this, what I did. Look, I got hurt.
And that sort of leads us on to your whole entrepreneurial way of life and driving change. Aryze is a great example of that, right? For the last couple of years, you've been leading Aryze, a global fintech based out of Copenhagen, in changing the availability of financial support to the unbanked and the NGOs, using the foundational notion of central bank digital currencies in a full reserve banking model. And for the benefit of our listeners, could you maybe share a quick overview on the mission for Aryze and the problems you're hoping to solve with Aryze in this digital world?
Mm-hmm. Mm-hmm. When I was a part of Coinify, I ended up running their innovation lab. I was head of the innovation lab. And for a number of years, I got to build a bunch of cool solutions with large partners. So for example, together with the Ministry of Foreign Affairs and a global think tank called Sustainia that existed back then, we built this concept of micropayments to solar panels. How could finance the production and development of solar panels on houses or in villages or rural areas that lack electricity. And we actually built really cool prototypes where you could scan a code and send a few Bitcoins to a wallet, and that would turn on the machinery that would give electricity, for example. So we looked into micro donations. We looked into a concept called pay as you scroll. So while you were reading an online news article, you would pay for the stuff that you actually read rather than subscribing monthly or annually to a news outlet. So again, a micropayment system. And what I realized is that you can build so many cool things. And me being a creative guy, I couldn't stop thinking about cool stuff that you could build on top of cryptocurrency or using blockchain technology. But the problem that I kept coming into is no matter what we built and pitched towards the NGOs, towards the media outlets, towards any grand industry that wanted to listen, they couldn't follow along as soon as you talked about cryptocurrencies. They cannot understand a volatile asset that goes up and down and is anonymous and maybe it's not anonymous, and they don't get it. People are still not adapted or used to those kinds of abstract things, and that's why the big initially the big media sites and the NGOs, they couldn't really implement a lot of these things. It was still in its infancy. What Aryze wants to do is make a digital version of what is already known, cash money. And this digital version of cash, we call it digital cash, should have the same kind of possibilities that lies within the world of cryptocurrencies, the same programmability where you can build on top of it and extend it and use it in all kinds of cool and smart ways. But individuals should not be forced to be using Bitcoin or Ethereum or any cryptocurrency in its core format. I believe those are meant to drive an infrastructure-based layer, and then all of these applications and businesses that build new stuff on top, they need a digital dollar, a digital euro, a digital krona, a digital something that they understand and know and is internationally acknowledged amongst their partners. So we're working very intensely on creating a digital dollar backed one-to-one with central bank deposits. And that's why we call it digital cash, because unlike a bank deposit, which is essentially the bank's money that you trust the bank with, this becomes a one-to-one deposit of central bank currency. So essentially, we give you or you obtain a form of government security and government risk rather than being dependent on a range of financial providers or banks. The money should just be there. If you have $100, there should be $100 bills with your name on it somewhere, right? Securely somewhere with the institution that printed the money in the first place. So in the case of the dollar, that would naturally be the Fed. And that's why we come into the central bank currencies and touch upon those. But there are several reasons why central banks cannot and should not and will not issue Fed coin or central bank currencies in the way that is imagined by the open source communities, an open and free and transparent solution. No, we're most likely going to see something like we're also seeing out of China, where you have a central bank stable coin, which is like super monitored and not very transparent. And we're probably going to see some things like this and like those things. And what Aryze wants to do is challenge that and say, no, we need smart money. But we also need privacy. We also need a sensation of ownership, and we also need, there's a lot of things a lot of values that need to be incorporated in money. And the way that central banks maybe are conceptualizing central bank currencies, I don't see it happening right now. But I see the need for it, and yeah, we aim towards making that happen in a way that is, we're on the people side, so to speak.
And part of that focus for you is on the NGOs and the problems that the NGOs are facing when it comes to cash. Do you want to go into that a little bit more?
Many people in our space are talking about banking the unbanked.
Yes.
Or enabling people who don't have access to financial services to get access to those. But the issue is not only technological. It's very difficult to know who these people are and how they operate. It's very difficult to onboard them and do proper KYC into any financial institution. It does not matter if it's a bank or a blockchain-based, legal blockchain-based exchange. You need to have some form of identification. So the issue is not so much technological in that sense. It's more like, who are these people? We thought the best way to access these areas and these individuals is through organizations and companies that work with them or know them, or institutions that teach them. So with that in mind, we have what we call the Aryze Ambassador Program and the Aryze University programs, where we have gotten agreements with several educational institutions with the aim of finding smart people that we give tools to build local solutions. That's one side. That's one side of it all. But in order to, let's say, help out a community in Peru that does something to save a forest somewhere, right? They maybe employ or work with hundreds of people in those villages and the neighboring villages. So in order to know who these people are, we go through the organizations that work with them. So Save the Orangutan, Save the Children, Red Cross, all of the major NGOs are doing fantastic work. And we are trying to see how can we give you the tools to make your own business-to-business payments extremely efficient in a way that the savings and the time that is not wasted is really vast and really phenomenal. And in the end, how can that tie into me and you doing our donations to these organizations in a smart format as well? So we're not trying to force digital cash or Bitcoin or Ethereum down the throats of anybody in Peru or the Philippines or wherever we operate. If we want to reach a Filipino sailor, we go through Mask that employs hundreds of thousands of them and maybe come up with a payment solution so they can pay their salaries more efficiently. Up to a certain level, because Mask knows who these people are. And these people might not be able to get a PayPal account. But through a unique onboarding process we're building, where it's essentially business to consumer, we can know the end users through the corporations that already work with them. And that's how we're going to make a difference, not in 10 years, but just in a few. Because, keep talking about 2020 and now it's 2020. So it's like, oh, 2030 then. All right, well, 2040, why not? Right, let's postpone all the issues of today until tomorrow. But we actually came up with a model that works with the solutions of today through the corporations and businesses of today.
It sounds fantastic. It sounds almost like a very big challenge. How are you getting on that journey?
We are creating something innovative, but we're following the rules that are in place. And rather than seeing those as a barrier towards entry, we see them as kind of the guidelines that you need to do, the recipe to bake the cake that you can sell to the public. So the way that we are doing our early funding, the way that we're constructing our current funding, we're entering our Series A funding round very shortly. It's all by the paper. It's all regulated. It's all governed under the Kingdom of Denmark, following all of the international rules and guidelines. And everything we do is by the book. So if you do things the right way, well, then you get the blessings of financial institutions. You get the corporations. They want you to succeed. And that's that mostly, right? So I'm not this big conspiracy guy who think that no, they want to shut us down because we're a challenge. No, we want to create full reserve banking. Ergo, we need to get access to bank licenses. Then how do we do that? Well, there's a recipe for that. And if you do what's right, and if you do the right things, there's nothing preventing you from buying a bank or getting a bank license or doing a lot of cool things. We're just doing things by the book and not rushing out to thousands of exchanges with tens of thousands of users that we cannot control and manage like many of the other stablecoins out there. So we're doing it the right way, and that's why we have the agreements with partners and clients that we have. That's why we have this foot into the large international and Danish NGOs through our relationship with ISOBRO, who is an umbrella organization for these members organizations for many of these NGOs. So all of these use cases that we're talking about, we already know where they're going to be implemented and how it looks in a few years. And we can do that because we don't have a backbone or a history of shadiness and of doing stuff just Zuckerberg style, where you do it fail fast and do it quick. No, you can't do that in a bank. You can't do that with people's money. You can't fail quick. You shouldn't fail. So it's a bit of a different mindset.
Interesting reference there in comparison to Zuckerberg.
Sorry if that's not okay.
No, we'll keep that in. That's not a problem. But changing tack a little bit, going to the notion here of digital currencies. One of the things that you talk a lot about is around the notion of smart money or programmable money in the context of this. And the positioning that Aryze has on there. But why don't you go a little bit deeper into this notion of programmable money for our listeners?
Yeah, absolutely. So I briefly mentioned some of these concepts that we built with micropayments and solar panel payments and whatever we conceptualized and prototyped and actually put into production. Those things could not be built using PayPal or Revolut or your bank. Maybe some of the features could be built by the new open banking and the new PSD2 standards that we have, and some payment solutions could be built by creative people who want to build new solutions. But with cryptocurrencies, you don't really need to ask anybody for permission to build cool stuff. You don't have a PayPal saying, "Nah, we don't want that. We're not getting access to our APIs." You just have it because it's everybody's. It's open source, and that encourages communities and developer centers and all kinds of institutions to build new solutions and co-create and collaborate with one another. And that's why we're seeing so many distributed apps, so many exchanges, so many protocols that are being developed in an open source community. And on a contrast to that, the Danish central bank spent around 4 years updating their software from Kronos to Kronos 2. Like in 4 years, we had 5 technologies that got invented. So it's the pace of things happening is just vastly different from the world of legacy. And the innovative solutions that can happen on top of a network which nobody owns is just phenomenally faster than anything bound to legacy or cloud, where you have to knock on somebody's door and ask them to let you in. With that in mind, we have tokens that are programmable, right? What we think we need to do with digital cash is to make truly programmable digital cash. We need to create something that essentially works within our bank, our app, our layer. So we call that layer MAMA, multi-asset modular app. So think Mama Pay. It's a mobile app, really cool and elegant and super modern, built from the most digital country in the world with the most digital currency in the world, all that good stuff. It's a really cool app. But the thing with the app is not how cool the modules are or how cool the extensions can be or how many currencies you can trade into. It's a small feature that enables you to send out, let's say $100 to third-party wallets, let's say an Ethereum wallet or a Tron wallet or a Neo wallet or an Omisego OMG wallet, or whatever blockchain you wish to, or even Hyperledger if it's a closed setting, or Stella. We need to enable the transfer of digital cash to third-party wallets, because those third-party wallets are exploding. They're building so many cool concepts, and rather than replicating these concepts and kind of cloning them, we create our interoperability features so that if a development center out of China wishes to use the Neo blockchain to build something cool, well, let them. They want to use Neo, let them use Neo. So we think of it like, like an ATM where you can withdraw money, but you decide which wallet to keep it in. It's kind of like that. When you have your money within the Mama layer, you can move it outside of that layer and keep it within any format, any wallet that you like. If you want to keep it in cash, send it to a paper wallet, and you actually just made a paper note, which is worth $100 because it's backed by $100. You counterfeited money, which is worth $100. Kind of weird construct, but but you could theoretically do that by having, sending 100 e-dollars, we call it, to an Ethereum wallet, where we then issue 100 electronic dollars on that wallet address. And that can be used to build everything using Solidity and using the tools within Ethereum. We don't even need to offer our own developer tools, because Solidity and the tools within Ethereum already have a lot of attention. So we're using publicly available tools to build cool features upon money that we hold as a custodial on behalf of our clients, that we hold safely and securely.
It's a fantastic vision and really interesting. I'd like to step over the wall for a minute back into the traditional world of the big banks and Ville. We've had a number of discussions around this notion of smart money, programmable money, the journey in towards Industry 4.0, etc. I can't quite remember exactly where we've got to on this, and I know it's a moving target for us. But sitting in the big banks, listening to everything Jack has said now, what's your view here?
Yeah, so I'm gonna actually do 2 throwbacks now. I have the luxury of doing so because we've done a couple of episodes, and on top of that, I've already talked with Jack actually on many of these topics earlier.
Oh
so
yeah, you have. We're going to have to
yeah.
link the YouTube video of you two talking from before in the comments to this podcast, won't we? That we need to do, guys. Yes. Yeah, we'll do that.
We'll do that. But first, the first throwback is to our last episode, actually, the first episode of season 2 from a couple of weeks ago. So there we talked about this disruptive innovation versus incremental innovation, especially in the context of financial infrastructure. And I think this is actually playing quite well, this episode with the previous one, because we talked then a lot about doing things by the book, doing things according to existing laws, existing regulation and compliance, and that's indeed what the banks are doing. So Jack, you already mentioned that you can do some of these things with the open banking APIs and whatever is happening in the kind of incumbent space, if you will. And indeed, that's reality today. It's not as flexible as the completely open side, but it's kind of getting there, and it's all done by rules and regulations and compliance. And then also in the last episode, we talked about the other side of things, the permissionless blockchain space, where everything is open source. Anybody can do anything, including the good things and the bad things. So when you have full openness, you get both sides of that. You cannot get just the good. You also have to accept the bad. So of course, there's going to be a lot of flexibility, a lot of things that you can do, you cannot do with existing infrastructure, and that's due to the fact that there's access. So you have access to layers of the stack that you don't typically have through a bank. Ultimately, all money is already digital. So even the money in the incumbent banks is sitting somewhere in a database or in a mainframe, and it's digital. It's all just numbers. Then the layers on top of that define who gets to move those numbers around. And the laws and regulations have basically made sure that this privilege is only limited to very limited amount of institutions and people, i.e. banks and other regulated institutions. Now, the other side of this, again, full openness, basically opens all of that to anybody. So that's obviously not okay for banks and regulators, but still opens up interesting opportunities, and it gives us new interesting ideas. I think I'm on the record saying that I actually enjoy watching, for example, what's happening in the decentralized finance space due to the fact that they do a lot of horrible things, but they also do a lot of interesting things. So basically learning how this kind of completely open mechanics works gives us a clue on what could be the good way of doing things going forward. So yeah, I think I enjoyed the notions Jack made there on the kind of playing by the book, and I definitely noticed, which brings us to my other throwback, which is the fact that we had a fun debate, 45 minutes or something. I think you can still find it on YouTube, and like you said, Paul, we will link that in the show notes for sure. But I'm happy to hear that the things we discussed, I recall discussing, was related to the fact that no, you cannot really do an ICO, and you cannot really turn that page back if you do, because then you will have all sorts of issues with you don't really know who has invested in your company and all of these things. Then the other side of the conversations that we had, which is there's no wrong in actually going for these licenses, going for the e-money licenses, getting into the banking space and being regulated and compliant, and doing things from a technology standpoint in a way that actually makes things better, cheaper, faster. I think that's a great development. Now, it's not as simple as just going in and getting that license. Everybody knows that it takes time and patience, and especially the regulators might not fully understand everything that's going on, but it's their job to do so. So I think it's pushing the envelope with the regulators as well. It makes a lot of sense, and that I think is the kind of middle ground here. So you should kind of go for the compliant and legal and completely kind of above the surface kind of approach and go for the regulatory compliance status, but at the same time you should really push the envelope when it comes to compliance and regulation, because that's the way the society will develop in the future for the better, we hope.
And I think that's good advice to all fintechs and entrepreneurs working in the financial industry, right? There's only so far you can swim against a stream before you start drowning. And working with the regulators generally tends to be better than working against the regulators.
Yeah, you can follow the rules, and so you can follow the rules and still push boundaries. So we completed the first successful ICO, a pre-sale where we raised around 10 million krona, I think $1.8 million. So we completed a successful ICO out of Denmark. Not that it was easy, because we followed all of the prospectus rules set, and we could not send our white paper to more than X amount of people, and everything was very tedious. However, we managed to complete it, and that can maybe set a standard for the next one and the next one and the next one, because they can see that it can be done. It can be done from Denmark, from a European country. You just got to do it right. And we send our white paper to the Danish Finanstilsynet, the Danish FSA, and we've always been in close dialogue with them about anything that we have been doing. But we still try to push a few boundaries. What I don't, and it's funny, God, Ville, I missed you, because it's funny that, you the way you speak about the banks and the way that you do it, you're so positive, right? What you're basically saying is that you guys have employees that scout open source solution where cool 17-year-old kids are building cool stuff, and then you're trying to take it and conceptualize it and make it into a PSD2 standard that you can sell to JP Morgan, right? Or it's like, it depends on how you phrase it, right? Why not just use the original core concept? It's safer, it's bigger, there's more people already. What I don't like is not PSD2. What I dislike is the fact that what you're tying into with those APIs and where you're giving your money is essentially an institution that takes it and says it's no longer yours. We now use it to give it to other people. And that's why we've seen financial crashes again and again and again, because of those damaged fractional lending activities. And since the Great Depression, the Chicago plan has been conceptualized, and I've been preaching that like I was a minister, where we need to have a full reserve something which is not based on you trusting the banks. Who trusts their bank? It's not really the same times anymore. You don't trust the bank, you trust the money they hold, and now you realize it's not even yours. So it's not the open banking APIs I dislike. It's not the fact that Revolut uses NatWest or ACB Bank, and I like Revolut. It's a cool app. It's not that the Monaco crypto app is bad. No, they use PSD2 to tie into a bank account so they can give me a payment address. It's fine. It works for what I needed to, but I just don't want it to become an all-encompassing thing, like a Facebook coin. If they got millions and millions and millions of users, it would be too grand. And having banks holding more and more and more and more money in this inflated state where they fragment it, lend it out, and you trust them, I don't think that is. We need to have a bearer token, a bearer instrument that makes it yours. No matter how cool PSD2 and open banking is, the money that you see on your screen, if somebody turns off the computer, you don't see it on your screen, it's not yours anymore. It happened in the most digital trusted country in the world of Denmark 10 years ago. If it can happen for Denmark, for a bank in Amager where I lived, it can happen to everyone. So why do we need to borrow money from Poland if I want to borrow money?
Jack, can we?
Jack, you've just opened You've just opened Pandora's box. This is fantastic, and this is why I love you two guys. And I know this is now going to go diving into a rabbit hole. Ville, I'm going to give you your chance to come back on this, but let's not dive too deep here, right? I love you guys. This is fantastic.
I'm sorry.
Ville, the floor is yours.
I will just be very brief. So for people like you, Jack, me, and Pål, I mean, for us, we understand what you're talking about. So we're talking about having complete sovereignty of your assets and having access to your cash. But for most people, I would argue almost everybody, they have no clue. So the only thing they actually rely on is within the infrastructure, the government that is around them, and the trust that is built in those institutions by the laws that are applied in those countries. So especially here in the Nordics, the trust in institutions is very high. The trust in banks is still very high, no matter what you say. And we just obey the law. Now, we can argue that the current system is rigged and the laws are not fair and all of that, but there's a political system to fix all of those things. I would say that if the law and regulation permitted, a lot of the banks would do a lot more things differently, but it's actually the system that works because there's checks and balances for the banks by the regulators because of these trust issues. So the bottom line is that from the regular consumer standpoint, the choice between something that's been around for 100 years or as long as they have lived practically, i.e. banks, it is easy to trust those banks compared to a new tech startup that has 15 employees somewhere in the world running an open source stack that you don't really understand because you're not a technical person, nor should you understand that. So it's this trust in institutions that will drive the adoption anywhere you go. And that leads me into the kind of middle ground argument that I made earlier, is that by trusting those institutional infrastructures and laws to develop over time and challenging them is the right way to go, not to say that whatever is here today is evil and should not be trusted. And I think that developing these things together is the way forward. And by the way, my job is cool, so that's why I said
Okay,
please let me. You gotta give me a second. You gotta give me a chance.
Okay.
I'll keep it short.
Okay, Jack.
I agree with a lot of the way that these institutions have gotten our trust. What I would argue is that the trust is not so much in the institution, but more under the government under which they are governed. I don't trust Revolut because they use whatever bank they use. They can switch their bank. I don't care. I trust them because they're regulated in EU and I trust EU, right? So I don't have personally that connection with my bank. I had the same bank account in Danske Bank since I was 13, but the last 5 years, I've gotten all the crypto apps, all the payment apps, all the apps you could imagine. I don't really care about my Danske Bank anymore. So the trust is in the fact that it says euro or dollar or DKK on my screen. For me, it's not that a bank that got a bailout 10 years ago holds it. That for me is not why we trust the banks. So, and I would say even now with the Danske Bank scandal, biggest scandal ever, done by a Danish bank, that's ridiculous. We're the most digital country in the world. And then the scat scandal again in Denmark. So especially the last few, let's say 5 years, trust has gotten way down. And the new generations that pay with fingers and eyes and smiles and whatever they do, they don't care in the same way. People use Venmo, people use Cash App. They don't necessarily use their banks. And the reason why we use the banks is because we have to. Aryze is right now in a situation where Danske Bank says we cannot work with companies like yours, but we have our NEM account with them, which you by law have to have a NEM account. So now we got to go out and find a different bank account because Danske Bank don't want to work with us, but the law says we have to have a NEM account and we're a Danish company. So why am I by law forced to keep a bank account with a company that doesn't want me? Because the law says I have to, but the bank says, if the law says I have to, then you better give me a bank account by law. Then the bank shouldn't be able to say no. But we're forced to keep our money with a custodial, forced by law to keep our money with a custodial that fragments it. That's the part I dislike. You have no alternative. You have no alternative where $1,000, a $10,000 corporate deposit is actually your company's. It's not your company's. It can go away. And I dislike the fact that an alternative does not exist. Look, I just bought a house. Fantastic. I borrowed money. I borrowed a lot of money. So I need credit. Great. Let there be institutions that do credit of some sorts, but it should not be the only option and then governed from the state that you in the Kingdom of Denmark have to do it, but they can say no to you. That to me doesn't make sense. And I think that was my minute. And of course,
No,
I love you. I love everybody on this call. Let's just get that out of the way.
No, this is fantastic, and like I said, let's try not to go down into a rabbit hole. We've got a certain amount of time here. I think at the end of the day, both of you have made very valid points, right? The banks are regulated, they're heavily regulated. And the reason why they are regulated is because they are trusted to look after your financial life and your finances. I think we're in an interesting position in this world where technology has got to a point where there is a lot of digital disruption. I think we've got this paradigm where you've got technology companies that really understand technology, understand what they can do with technology, and they're looking at banking and saying, I can make a difference, but they don't understand banking, like Ville has pointed out. They don't understand that heavily regulated world that the banks are operating in and how to really operate as a bank. And therefore, they look from the outside and see things to them being very easy. Hey, I could do that. But then they get hit by the regulations. On the other side of that coin, you've got the big banks who are very, very good at banking. They're very good at working with regulations. They're very good at understanding the regulatory framework, but they're not very good at technology. They like to think that they are, but they're not technologists in the same way. And so therefore, particularly at a senior level in banks, they fail to understand how to take advantage of this technology in the right way. I think the future is one of partnership between each sides of this wall, right? And I think we're seeing that. I mean, you said this about Aryze, do it the right way, do it with the support of the banks, etc., but challenge where it's most relevant and challenge to make a change. So I think this is fantastic, right?
I think we are in agreement, actually. Ville said that they tend to look at in the open source sphere for ideas and concepts. What we do is we look towards the regulators and on how to do it the right way. So we are already in that kind of trying to bridge the gap between those two worlds. And I agree with what you said fully. Young startup needs to follow the rules and look to the big the big brother who can kind of guide you and kind of show you how it's done. But you got to be inspired by the little brother as well. The little brother has some really cool ideas that the big brother should listen to.
Absolutely.
And big brother as
and Society 5.0 is going to change all of this for us anyway. Right.
Sounds like we landed in a violent agreement.
We did land in a violent agreement. Let's open the beers, guys. And now for something completely different. As is the normal on this show, right? We like to deviate at the end and look at recent articles in the news, things that have popped up that has caught the attention of Ville and myself to lighten the mood, sort of move out of the discussions and across to somewhere else. And for this episode, I figured with our focus on crypto and digital currency, etc., we had to look at the article that was published very recently on the US seizing Bitcoins linked to terror groups. And this brings a huge number of questions, right? Particularly for us three, focused on a number of questions around the whole Bitcoin anonymity, the fact that you can anonymously trade, no one can trace back to you. There's been lots of these discussions before. And when you read through that article and the fact that, these terrorist groups had used social media to show how you could anonymously supply money or supply cryptocurrencies to these unfavorable organizations, and it all turned out to maybe not be as anonymous as you expected. What do you guys see about this? Jack, how do you see this?
I'm not necessarily a crypto anarchist that thinks that we shouldn't have those kinds of elements. We need to have a way to track and trace and to look and to surveil to some degree. My thought is just that, well, what are the guidelines for the dollar? That's the one we follow for the dollar. And if we are told by the authorities to, let's say, release something about our clients, we would have to follow the rules like any payment institution follows the rules. The difference in our ideology is that we don't do that kind of stuff automated, and whatever activity happens, we log it. So we know who requested what did we do, and we protect it with multi-signature concepts where nothing can just happen from one regulatory guy who just wants to look into some API or if, stuff like that. So we do follow every rule that there is in this sphere to prevent money laundering. And actually what we have done and what we are doing is pushing the boundaries of how this can be done in a way where we are on the people's side, right? Because right now, this article that we're talking about and that you're referring to, Of course, it has all of the right buzzwords, right? ISIS laundering money through Facebook channels using Bitcoin. It's like straight out of a movie, right? It's a fantastic headline. But when you look into it, we're talking about $2 million and 150 people. Why is this even a part of the conversation when the banks are involved in laundering billions annually? Like, why is $2 million and 150 people even worth the conversation? When less than 1% of Bitcoin transactions, this set by Chainalysis, I believe it was, is linked to illicit activities. And for a decade now, people who use Bitcoin for criminal stuff, they know we shouldn't do it because it's really not that anonymous. And we saw that with the Mt. Gox hack. We saw that with the Silk Road hack or the Silk Road crash down. We saw again and again and again criminals being busted using Bitcoin. So the fact that we now 5 years again are seeing this article on all of our news feeds and all of our LinkedIn, it's $2 million. That's what's being laundered just by me doing this rant, right? So we could ask ourselves, maybe the solution is actually within blockchain. Maybe the fact that there's a chronological order of every single payment happening enables us to have exit points at legal entities where you exchange to fiat. Because funny enough, you exchange to fiat to make your criminal stuff. So it's not Bitcoin being used for the criminal stuff, it's the fiat. In the end, you want to get your crypto out to fiat so you can use it for criminal stuff. That's what the article also talked about. But we're talking about $2 million worth of cryptocurrency. And most of them have been standing still for a number of months. And then they suddenly move. It's $2 million today. Maybe it was $1 million when it happened. Like, why are we even putting so much fuel on the fire when Danske Bank a few months ago had the world's biggest scandal amongst their own shops? There's so much money between their Estonian department and the headquarters in Denmark. They can't even do their own settlements. But every single criminal enterprise using Bitcoin has been busted. But we're talking about $2 million. Oh, it happened again. Why are we not talking about the legacy systems where Excel spreadsheets are being matched? That's where the real money laundering happens. And by using blockchain, by using the technologies that Chainalysis provides and that these similar companies are building, banks will realize that if they start using that thing and having a shadow ledger, they can find patterns that they couldn't understand before. Real time. That will happen in a few years. And then we'll laugh at this article. Sorry, that was my 2 cents.
You're so colorful and full of passion, Jack. It's fantastic to have you here with us. Ville, what's your thoughts here?
So Jack, take a deep breath now, Jack, and relax for a moment.
I will mute myself so I don't yell. Wait, 1 second. I'm just.
So I'm going to let Jack's comments on the bank's slide, or at least wait on the side a little bit, because it's a longer debate. But a few things I want to point out about this article. First of all, Bitcoin is not great for criminals. I mean, obviously it's open, transparent ledger. Companies like Chainalysis and others can actually analyze the traffic quite accurately. And if you want to move around value in Bitcoin, you will get exposed. Now you can use tumblers, you can use all sorts of mechanisms to try to avoid being detected, but ultimately everything is out in the open. This actually is one of the reasons why Bitcoin is not compliant with banking regulations, for example. There's pretty straightforward privacy regulations and data protection and bank secrecy regulations that stop this type of transparency from being in existence. It's not that it couldn't be done, it's because it's the law. Yes. So again, that aside, the fact that this is a headline again, I mean, déjà vu, I guess, was my first reaction. It's though in regular basis you will get this Bitcoin is being used for crime, and then when you look at under the hood, you realize that actually the numbers are pretty small. Now, there's actually a reason for that. Well, first of all, it's not great because you get caught, but secondly, access is not great. For most of these criminal activities, the liquidity side of cryptocurrencies, including Bitcoin, is not that great. So, for example, if you noticed all these kind of hijacking viruses that keep on going around, they they typically used to require Bitcoin payments at one point in time. Now, what these people who actually make the virus realized is that people, even if they wanted to pay, they didn't know how to because it was Bitcoin. So it was lost revenue opportunity for them. So many of them actually have now enabled PayPal payments to pay for your ransom because it's easier for people to do, and then they use other more traditional mechanisms to cover their tracks. But yeah, it's all about acceptance, right? How do you actually make it easy for people to use, including criminals? So so it's this fun, or actually not that fun balance of acceptance and usability that it applies in this case as well. But yeah, I think it's an interesting debate. It's a complete systemic change that we're talking about if you want to enable full transparency. Now, this transparency exists today for regulators and supervisors. It's only being burdened by the fragmentation of the old infrastructure, which has been built over decades of different kind of law and regulation. So again, a longer discussion. I'm afraid we don't have time for this, but we should do like a spin-off episode.
Yes.
We should do indeed. And as you were saying, time is pushing, and unfortunately, my friends, as always, time does fly when we're having fun and exciting discussions like this. So it comes to the end of another fantastic episode of Fintech Daydreaming. But before we close, as normal, Ville and I would like to give you, Jack, a chance to let the listeners know how they can find you after this and get in touch and maybe continue some of the discussions if they want to.
Yeah, absolutely. Well, my name in itself is quite unique. So if you Google Jack Nikogosian, I assume I'm the only one that should pop up. So I'm pretty easy to find. But I would refer to people to our website and our blog on Aryze.io. And our blog, you can search for it. But we regularly make a lot of interesting articles and interviews and posts and just share a lot of knowledge. And if there are any students listening to this, anyone enrolled in a university program of some sort, we have our Aryze Ambassador program, where our ambassadors will be the first ones to get access to our tools and developer accounts to build their own solutions and the solutions that their communities need. So if anybody is interested in reaching out, please feel free to do so. If there are any professional investors, accredited investors around Europe who are listening to this as well, we are currently entering an extremely interesting hybrid investment round. Our Series A is just around the corner. So of course, if there's some curious people, please just reach out to us. Our emails, everything is, and our contact is on the website. So feel free to have a look.
Fantastic. Okay. And to our great listeners, you want to get in contact with Ville or myself, then our contact details are in the description underneath. And thank you, Jack, for again being a fantastic, wonderful guest here on Fintech Daydreaming. To all of our listeners, if you've got any ideas, thoughts on what would make a great episode in the future, or maybe you've got a story you'd like to share with everybody, then let Ville and myself know. And thank you all, our great listeners, for sticking with us again this time. I know it's ended up a longer podcast, but I'm sure you will agree it's been a fantastic, colorful discussion. We look forward to having you listen to us and join us again in 2 weeks' time. My friends, this has been Fintech Daydreaming.